What's up, y'all? It is your Chic Mortgage Millennial coming to you with a video about some mortgage things. But I just set up my new microphone. All of these terms, child, all I want to do is do mortgages, okay? So I just set up my new mic, so hopefully y'all can hear me okay. But I wanted to come to y'all because, oh my goodness, I had so many topics in my head. I don't even know how to pick one, but I'm going to try to pick one. But with these mortgages, y'all, it is a difficult time. So part of me wants to talk about like the mindset of a mortgage loan officer in this society, in today's world, and the other half wants to talk about student loans because I was just having a good conversation in my loan officer group chat. So I'm going to start with mindset, and I'm going to talk to my mortgage professionals. Okay, this is for y'all, this is for us. It's okay. It is okay. Let me not shake the camera, but it's okay. I don't think that people have a clear understanding as to what mortgage professionals are dealing with in order to just maintain in this time. And it's not about the loans. The loans is one piece of it, but it's also just dealing with the different personalities, sorry, I was waiting for these disclosures to send out. We still getting contracts, okay? Don't get it twisted. I'm still working. Yes, I would like to sign the 1003 now. Contracts are still coming in, but we're just dealing with a lot. So the mindset of a mortgage professional, I feel like that is what I wanted to focus on today, because I want to encourage y'all and uplift you and let you know that it's not just you, and let you know that, you know, although everyone makes it seem like, oh no, it's fine, it's normal, this is where rates used to be and blah 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 blah, they're not taking into account what the professionals in this industry are dealing with. So you can say that, oh yeah, rates were 20% on a home. Okay, well, this is not that. Most people have not experienced what's going on today, because it's not just the rates, it's a increase over a year, over 2 years, over 3 years, 4 years, so on. So most of the time, let's say I've been state licensed for 6 years, but I've been working in this since 2011 when I graduated. So all I got to think is, how long have you been doing mortgages? Since I graduated. Got my first job at Wells Fargo, and I was selling mortgages at Wells Fargo for my first job, because I lied on my resume. And it's okay, everybody lied. Got a job real quick because I grew up in the mortgage industry. So skip all that. You know, since I've been doing mortgages, it has not been this difficult to do mortgages. The hard part of doing it is more so like, okay, there's a learning curve, you know, maybe an underwriting objection, something that a borrower needs to provide that you didn't know was going to be provided. But for the most part, how you submitted your loan, the findings wouldn't change too much, so you know what you're getting into upon submission. And then you can prep your client, and then as you're navigating through the process with the client, it's more self-facilitation. If they do something that they weren't supposed to do, like, you know, quit their job, that has happened to me, but add debt or just do anything out of the normal, spend all their money, then you have to kind of pivot. So those are some things that you deal with. Okay, that's normal. But now, you know, we're dealing with DU and Freddie Mac. I haven't even had issues with LP like that, because usually if you're using LP, borrowers probably has a more clear-cut situation. But for the government loans, usually we're running DU, FHA, VA, conventional. USDA, they have their own system that we run, and that lets us know what the underwriting findings are. So then we can filter through and be like, okay, well, this should be good. You know, we just have to verify this, that. Now, what has been happening is that once you send your loan to the underwriter, they update certain things. I'm gonna keep saying this because all a borrower has to do is breathe in order for a loan to go from approved eligible to refer eligible. So, when it happens like one or two times, you start to notice, and you're just like, this is odd, because the whole thing for getting a pre-approval is trying to make sure that the borrower, you're looking at their income, assets, and credit, looking at their application, making sure you have the underwriting findings so you know what to do. But because interest rates are increasing while people are under contract, their DTI might be higher than it was when they were pre-approved, or maybe their assets, they had a certain amount of money, but they spent some money, so now they don't have the same amount of reserves. Whatever it was, the things that it's taking to change from a regular underwriting process to a manual underwriting process, it's just happening like this. It's just happening like that. And so what we'll start doing is we'll start peeking around, talking to some mortgage professionals that have been in this industry. And we were like, how are you doing over there? Like, is this happening to you? And you start noticing, you start seeing in Facebook groups, and then you're just like, okay, well, what is going on? Fannie Mae, that's who is over DU. So if you hear DU, it's Fannie Mae. So people are like, well, what's going on with Fannie Mae? Like, are they trying to kill us? What is going on? Because there are certain things that just would not pop up, you wouldn't be dealing with. And you're dealing with these on multiple loans. Then in addition to that, I was talking to somebody and it made a lot of sense. He was like, he's been doing mortgages for 20 years. People love to talk about how long they've been doing mortgages. So he's been doing mortgages for 20 years, and he was like, yeah, I've never seen nothing like it. He was like, shout out to the loan officers who are able to continue during this time. I laugh because I know that there's a lot of mortgage professionals who are just like, listen, I ain't got time for this. Once the market shifts, I'll jump back in. That means a lot of people are leaving the industry. And a lot of people are just on pause. Like, I can say to myself, like, I stopped giving out my business card as of lately. Like, my phone still rings. I'm still getting consistent stuff. But because of the quality of loans and quality of people, a lot of people are taking a step back, We still want to do business. I'm still closing, but just going as hard to market and promote yourself. You'd be like, you meet a realtor, you'd be like, hey, how you doing? Because it's just added BS, added clients who don't qualify, added clients who gonna complain about the market, added clients, just added work. It's a lot of community service behavior that we're doing right now as mortgage professionals. So I can understand that, like, people who they've got reserves, in the mortgage industry, they've been doing this for a long time. They're like, I don't have time for this. And it's honestly because people on the outside, they have no idea what's going on in the mortgage world, because all they see is people promoting programs and interest rates. Hey, look over here, we can give you this interest rate. No, if you go over here, we can do this. It's sales on 1,000. Everyone is just selling because everybody wants a deal, but no one is really talking about like what is going on with the mortgage industry. Lenders are closing, underwriters, there's layoffs. My company just had a layoff. Like, I ain't gonna see my own horn, but I ain't never been laid off, and I don't see myself getting laid off. So thankfully, thank you, Lord. I'm here to survive another day. The companies are closing. It's just a lot going on. So all of that is gonna have an impact on your emotional stability, financial stability, because you're gonna be like, how long is this gonna keep going? Like, every time I pull interest rates, I'm just seeing them go higher, and not even just the interest rates, I'm seeing pricing get worse. And I'm just like, pricing is the cost of the rate, how much it costs to borrow money. So I'll just say that's pricing. But just looking at this, it keeps getting worse, and you just be like, whoa, how long is this gonna go? How long? When is this chapter over? When is this story done? So we're dealing with, you know, that approved eligible turning into a referred eligible client that I just had under contract. These properties are just going crazy. I was talking to a listing agent because, you know, listing agents, they'll call if they see your name on a pre-approval letter and they just want to do the introduction. Sometimes the questions that they're asking, you can tell like everybody is on edge, because I had listing agents ask me like, hey, can you provide us with proof of funds for this borrower, because they just put in an offer. I'm like, proof of funds? What you mean? First of all, we don't give out the borrower's information. I've never had a listing agent ask me for proof of funds. Or they were asking like, what's the borrower's credit score? What's this, what's that? I'm like, this is Hunger Games for real. But you got to think about it, because listing agents, they're experiencing loans falling apart, whether it's due to the property inspections, meaning we're getting appraisals back with repairs because people are just putting whatever on the market and they're not passing. The appraisal is subject to repairs. Then we have appraisals coming in low value. Last year, that's fine. Homes were selling high priced or whatever, but the values of homes last year, if you were looking for a home that was 200 anything, if you started with a 2, then it was probably a shell. But nowadays, there's a lot of homes in the 2s, you know, or even the low 3s. There's just a lot of homes out there in those price ranges that just were not available. And if they were available, it was automatically like an investor deal. So in a certain range, like that $200,000 to $300,000 range, it can go either way. It can go either way. Like the home might not appraise because, for example, when we have appraisal disputes, people reach out and they'll ask us, hey, you know, what do we need to do to dispute this appraisal? The value came in low. So most of the time they'll ask for comps. Comps, that's other properties, other listings that have sold. Usually you should be able to find comps within the past month or within the past 3 months, or at the most you don't want to go out 6 months to try to say, okay, this is why this home should be able to sell for this. People giving us comps from last year, it's like, y'all do know the appraiser is not going to accept this. It's been a whole year. So you have to provide sufficient data if you are, even if you're listing a home, like, and you're trying to see what can this home sell for. Look at the comps in the area. But I can't teach mortgage professionals and realtors. So I can only do so much, but whatever. So in this situation, they couldn't come to an agreement because the comps that they were providing were from a year old. And even myself, because I have my real estate license, I even went on there trying to see if I could just find better comps to support this value, because I mean, shoot, I want to close too. See, they think the lender don't want to close. The appraiser doesn't work for us. We communicate with them through an appraisal management company. So there's many times where I have to step in and do realtor tasks because the realtors are just they're not able to do it. So I took some time out of my day. And again, these are some of the things that loan officers, we have to do go that extra mile and do these extra things, hoping to get a check. But I went on there, I searched, like I was searching, and I was finding some that were, you know, slightly higher, but it still wasn't where they wanted to be. And it was kind of sad because when you're doing all this research, you almost end up agreeing with the appraiser, like, bruh, ain't no home selling for this price. So what y'all want to do? Listing agent, buyer's agent, tapping y'all in, what y'all want to do? I'm going back and forth with the appraiser. We have a chief staff appraiser that assists with disputes. And you know, they like, look, if you can find something, I'll back you. But ain't nothing out there. Nothing's out there. So we're dealing with low appraisals, sellers not coming to an agreement about doing repairs that are required for either FHA, primary residence properties. That's mainly the things that's been coming up. But it's just a lot, and we're facilitating all of this stuff loans end up falling apart if the buyer and seller can't come to an agreement on the property. Then we're dealing with loans going from approved eligible to referred eligible. Then we're dealing with people who don't want to spend money to buy a house because they don't read all of y'all house hacking things, and they feel like a first-time home buyer program means I don't need money for closing. So we're constantly trying to negotiate and let people know, like, no. So there's closing costs. So you can do down payment assistance, but down payment assistance is going to cover this. Closing costs is an estimate explaining closing costs from A to Z. And still, it's just like we're doing so much for free, hoping to get a deal. And so people, they see me and be like, oh, that's so good, you still doing your thing. I'm thinking, I'm like, am I? I'm really not. I don't feel like it. Would you like to know about my mental health? So it's a lot. So I want to do a post check and a check-in with my fellow mortgage professionals, because I have tough conversations with people every day, and they be like, man, I don't know if I could do this. I don't know if I could do this. And the people, they're just very needy, even during the mortgage process. Once your loan is in processing, it should be like, okay, cool, you're good. I did a solid pre-approval. Now time for me to get more business. Buyers want to talk to you every day, talk to you all day. So then that takes away from time where you can prospect to get more clients. Some clients, they literally want you to, and there's a difference when I say this, they want you to hold their hand from contract to closing. Like, let's meet for dinner, let's talk all day. What you doing, girl? Like, hey, I know you just got off work. There's no room for you to be able to do pre-approvals or disclose other loans or meet with realtors or host lunch and learns, do anything if you're busy like myself. Unless you're like me and I'm just like, okay, we're gonna have to wrap this up. I can't talk to you every day. Now, do I say that? No, I don't say that, y'all, but I think it. You just have to let them know, because people will abuse you. It is almost like abuse. It's almost abuse. When you're telling somebody what they need for approval and they're giving you pushback and be like, well, can I just give you this? And all you want to do is say, no, I requested this and this is what I need. Or when you're dealing with realtors and they keep, I'm not going to give specific situations, but realtors, they make it difficult as well, because sometimes it's like working with two borrowers. We already got one borrower, sometimes two co-borrowers. You can have up to 4 borrowers on the application, plus mama who giving her input and uncle who done bought a house and he ain't never seen this happen before. You're dealing with those things, but then you're dealing with inexperienced realtors who, they need this check. Ain't no telling when the last time is that they closed a loan, so they're operating off of survival mode, desperation. So they're acting like a buyer too. Like, you can give a realtor an update and all they want to know is this going to delay closing? Is this going to cause an issue? No, ma'am, please just sign this and get all parties to sign and provide it to us. Like, or, hey, we're waiting on your borrower's insurance quote. Oh, well, because, I mean, I wish we knew this before. And they're just like, what are you talking about? Like, what are you talking about? We're literally just waiting. No, they're sending it. There's literally nothing else that you have to do. The moment you tell a realtor something, they want to go call the buyer and panic the buyer. And, you know, it's just, they create so much stress. And it's just like, please, there's so much stress already. Y'all don't need to do this. Just call. She's already called the insurance broker. They're going to follow up with her on quotes. Like, your closing is 2 weeks away. Everything will be fine. Like, why every update or every milestone got to be panic? Please go sit on the yacht and wait for your check. That's it. Because it's hard enough and we're dealing with so much. So many people are quitting, thinking about quitting, all of these things. And I'm making this video to let y'all know that you're not alone. I'm not quitting though. Not at this time. But it can be done. Like, we just have to do certain things to manage our emotions. Like, some of the things that I try to do is I make sure that on Saturdays I rest. I go to church on Saturday, and that is our day of rest. You know, we believe the Bible says rest on the seventh day, so that's what I do. So at least I know, regardless as to what's going on, my realtors know I'm shutting down. I'm shutting down. Also, another thing that I started back doing is, of course, trying to work out, trying to get some outside cardio, trying to go to the gym. There's a massage chair at my gym. I didn't even know about this, y'all. So if you're at Planet Fitness, they opened up a new Planet Fitness by my house. So I was like, okay, cool. Let me sign up for, the black card. It's only $20, but that way if I want to work out with somebody, I can. They can just come. So one day I was just like, well, what's in that room? And they were like, you never use this, you're a black card member, blah, 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 blah. And I was like, well, I didn't know what was in there. So she took me in there, and there were like a whole bunch of different massage chairs. It was like, you can get a water massage. There's one that massages like your whole body. Y'all, it feels so good. And then there's just different things. I didn't know they were in there. So now, because I'm dealing with a high stress work environment, whenever I go to the gym, I just go in their room and I dedicate like 20 minutes to getting a massage, and it's free. I'm paying for it, and it's pretty good quality. Usually I only get that from the pedicure chair. But I do things like that. I have my cutoff times, because another thing that I noticed with different loan officers, or when it's high stress, you need the business because it's not a lot going on. Or not saying that it's not a lot going on, but it's just you're getting a lot of community service clients. So meaning clients that you have to keep begging for them to upload their documents or complete an application because they're not serious, because interest rates are high and they don't know if they should buy, and just dragging their feet on that aspect. Think of the amount of people that we have to follow up with, and then so many realtors on top of that, like, oh, have you talked to such and such? Did they do this? Did they do this? And it's like, no, they haven't. No. Like, it's so refreshing to have somebody just complete an application and upload their documents. You be like, oh yes, I'm about to evaluate right now. Because the evaluation, that's not the hard part. Getting them to complete an application, that's the hard part. Then with you pulling and trying to get somebody to complete an app for 1 or 2 weeks, they complete it and their credit, they don't qualify, or they give you a bank statement with negative funds, and it's just like, how are you supposed to do this without not having a few screws loose? I just, how? I don't know. Because when you find out, let me know, because I know I have a few screws loose, and that's why. Because if you didn't, you would catch an attitude, or you'll be quick to anger, or it's just so much emotions you wouldn't even know how to manage and deal with all these people, I promise. So the way that I do it, it's like I said, try to find some things for you. Another thing that I have been doing is just helping my husband with his event space. It's in McDonough, Georgia, Vibes 1122. We're under contract right now for another commercial property. So investing, like, I'm trying to take the advice that I'm giving to others and applying it to myself. Another thing that I'm in the process of doing finally is also getting an equity line of credit. So do research, see what are some things that you can do, because as a mortgage professional, it's kind of like a doctor. You have access to all of this information, all of these mortgage programs. You're constantly telling other people how they can invest in real estate and financing options available, but you should use them. Buy real estate. We are a cheat code. We have access to so much information. So to not just be bogged down with all of the frustrations and things that we're dealing with in this day and time, look and see, okay, well, what are some things that I can do to do multiple streams of income or to purchase real estate? So that way you're not just mortgaged 24/7, because if you do that, you're literally going to go crazy. So I'm just going to stop there because I don't want to make this video too long. But just when it comes to the mindset of a mortgage professional right now, you want to keep going, control the controllables, have your cutoff time. So if you are like, listen, I'm going to work up till 7, I'm going to make myself available until 7, log off. Log off. Because you're not going to get, this is what I told some of my family. It's been so much time doing community service behaviors for all day long, like all day, all night, until the point where they're tired. Like, people are tired. They're mentally, physically, and emotionally tired. And if you're looking at the market, you're seeing that, okay, for me to get a closing, I might have to talk to 100 people for one closing, or maybe 50 people for one closing, or maybe 20 people for one closing. But the numbers that it takes for you to get that one, they've increased. It just is what it is. And so since those are the type of clients, it's not even the clients, since that's what we're dealing with in this market, you have to be willing to say no. You can't do everything, because you don't need to run yourself into the ground for mortgages. I do mortgages. I love doing mortgages. I'm good at doing mortgages. I know a lot about mortgages, but I have cutoff times, because mental health and peace of mind is so important. I want a Yorkie. In other news, I'm like, I want a little dog, you know, for my times where I'm just bogged down in my computer, so I could just pet my dog instead of counting to 10 and trying to be nice and professional to these people who be driving me up the wall. So hopefully you like this video. Be sure to like, share, and subscribe. So maybe next time I'll talk about student loans, since today I wanted to talk about mindset. This is your Chic Mortgage Millennial, coming to you with another video about some mortgage things. Have a good day.